MV3 Traders Futures Trade Radio is brought to you by the Ultimate Trader's Guide, your one-stop shop for the most valuable income-producing information on the internet. Go to ultimatetradersguide.net to learn more. Link in the description below. All right, what's going on? What's going on? Have technical difficulties this morning, but we in here. Hope everybody had a good weekend. Got another day of low volume. You know, not gonna lie, I almost wanted to stay in the bed this morning when I woke up and saw that volume, but we here. Gonna show up and play the game. If I, get any any good setups. Stay consistent. Stick to the strategy and stick to the plan. Right now we're exploring the bear zone. Looking at some inventory. A main inventory zone off of PR-1 or PR-2. Which is, extremely seasoned at this point right now. We also got automation holding that inventory area up. Looking at supplies, we come back into supply or near supply around 944. Make sure I'm ready to execute if I need to. Going back to -1, which was our overnight mechanical inventory area. That did turn into supply before we started seeking cheaper inventory. So I'll see if we get another supply response. Also got some MSRP right above us with the VWAP. And friend, I'm just going to refer to that indicator as friend. We're pushing through all of that. It's not a whole lot of, the volume is still kind of low, so there's not much in the way. I kind of changed my, I can't see. There we go. Well, nope. Oh well. Changed my setup a little bit over the weekend. So quick supply response off of 970. Transacting, we're negotiating around VWAP. With these kind of indicators being so highly used by certain size participants, I kind of just, even if I get I have to get like almost a perfect signal, a perfect trigger for me to participate. But if it's like we're hovering like I'm watching right now, I like to observe these, understanding that there will be more opportunities, if not today, then tomorrow. I'm personally looking for like the best setup, so to speak. I mean, that's going to be subjective. It's going to be based off what I'm looking at, based off the probabilities that I've discovered and all that stuff. So I'm still just observing. We're starting to drop inventory in this little tiny range. Got automation that we're coming right back into. Catching the inventory response off automation. Still looking at this, this mechanical price action. Right now, that gives us an inventory just below 960 with supply at 970. Let's see if we maintain this shop, or do we go push supply now? Supply response. There's a quick supply response once again off 970. Inventory once again off of automation. Wholesaler setup shop here within like a 11 to 12 point range. All right, we're gonna start to push inventory lower after a quick supply response off VWAP. So the lower this value area we're starting to, this is where they're giving us a quick inventory response. It's also inside automation. And from my perspective, this is extremely tradable with it being so mechanical.
Yeah.
I'm just being really picky this morning. I know it's a mental thing for me that I just don't like to trade low volume days. And honestly, I prefer fast markets over slow ones, but without jumping the gun on the trader trigger. I do see, like a lot of people call this boring, but that's definitely subjective. I used to be one of those people that called this kind of slow action boring, but all I had to do was flip the way that I saw that, and me, unsubscribing from that narrative of slow markets or successful or good trading being boring. I was able to, see other things that I was able to see things that I wasn't able to see before. Because why would you pay attention to something that you're bored with? Like really focus and pay attention on it. All right, back to -1, we're seeing another supply response. See, I almost jumped the gun on trader triggers. Let me stay focused. Back negotiating around this popular area. This 960 zone. This is a zone that we've come together, that we've met up to negotiate some deals throughout the entire session. So we're back at it. So that move right there, that should take us lower. If not, a typical response, well, that did. So the other response was that could have gave us a slingshot back into our slingshot back into our supply. Still holding supply in that area. Another mechanical response off of inventory around 950. All right, starting to see a drop of inventory. And back inside the value area. So let's see if this gives us a slingshot. Or do we keep maintaining and holding supply? That was a quick supply response. So we're not done budgeting. I mean, they got to get as much as they can off this low participation. I probably should have took that trigger there. Back to the top of our shop. Watching for the end. It was a quick inventory response. See if we get a supply lift here back to MSRP. I think there's a 50% chance of price going in any direction or either direction from here. holding supply in that area.
Order filled. Order filled.
It's another one of them partial fills. I want to test something out real quick.
Order filled. Order filled.
Just need to do a quick little speed test there. So I have this one Sierra chart installed that seems to be a bit slower than everything else on my that I'm running. I got about 3 installs of Sierra running with NinjaTrader, but it's just one install that it always seems to be a delay. So I thought at first it was the data, but it wasn't, because I switched over the data and it was the same thing. So when I put the data that I was using before on another Sierra chart install, then the fills and the responses were quicker. So it's got to be something that I have about this install that's slowing me down or something. Got to figure that out. I don't think it's my trade copier either. We got a supply lift back into some MSRP mechanical response off the friend. I don't even remember what this indicator is that I have here, but something that I put my own numbers into. It's got to be maybe it's part of the Keltner channel. So I'm only saying all that to say that that's why I'm calling it friend, because I don't remember what that indicator is. Indicators for me are like just a quick little visual reference point, kind of a way to judge how mechanical price action is, or how mechanical price action was in recent history. History being a second ago or longer. Taking us back down to that inventory zone around 948, we're getting the inventory response once again. Way that I'm watching this print, we can tell this is extremely, really very thin market. Let me do a quick little, see if I can see the volume. For NQ, it's just above 136, which at this point This point, we're usually like, if we haven't passed 200K, we're somewhere close to it, typically on a typical day. But right now, we're just at 130. Then we should be also coming close to contract rollover. I didn't check to see exactly what date that is, but could also be playing a role into the volume decline. I think today is going to be a one and done day for me. Got about 5 minutes before halftime. You know, Mondays and Fridays are usually just like relaxed days for me, where I'm not really trying to overdo it. You know, Mondays I want to get into the groove of the market after taking a break over the weekend. Even though usually I do, at least watch some game film. And by game film, I mean my recordings, right? The sessions that I record. Over the weekends, I usually do watch some game film to keep my, to stay in the frequency of the markets, or of NQ at least. And Fridays are kind of my, so I can pick up some extra change, and that'd be great. But what I don't want to do is just completely ruin the week just trying to overdo it on a Friday, which I've done. So I like to take it easy on Mondays and Fridays, just kind of getting myself back into the groove of things on Monday, and almost in a sense winding down on Fridays. This is why I pick Mondays and Fridays for the live stream. And I really get aggressive than those other 3 days of the week. As long as I don't have too many distractions or technical difficulties. And of course, there's always exceptions to those rules. Today definitely not being one of those. Well, again, in hindsight, and we don't know, I don't know exactly how that would have played out, but getting delayed responses after I pulled the trigger. Today could have been a lot of scalps that would have worked out if I had the mindset to be more aggressive. Just as an observation, not really as like a regret or anything like that. Just just doing a in the moment review. So we are holding price here in this area where overnight we didn't have there wasn't much volume in this area overnight. Now we're using this as a point of budgeting or negotiating. And I would say the way that they're painting this would be appealing to some buyers. They're showing weakness to the downside. Holding the mechanics around 935. See if we get that quick inventory response. As you can look at the trend right now being bearish. But every time we try to push into lower prices, we fail to continue it. So now we're dropping the inventory. And there we go. We squeezed all of those buyers that were, and that's 10 o'clock. So they did it. They used the economic event news as to their benefit. I'll just keep it that way. Well, it's a layered thing, but anyway, it's halftime, so we'll be back after a brief break. MV3 Traders Futures Trade Radio is brought to you by the Ultimate Trader's Guide, your one-stop shop for the most valuable income-producing information on the internet. Go to ultimatetradersguide.net to learn more. Link in the description below. All right, welcome back to the second half of Futures Trade Radio for this segment of Trader Triggers. So in this Trader Triggers episode, I want to kind of build off of the one that I had last Monday where I talked about making the decision to quit or to keep going. So, usually when a trader is at this point of making that decision, trying to decide between giving up or if they want to continue along the journey of trading and investing, at this point, what leads them to that, they're probably in a point of or in a period of drawdown. So today, what I'm going to give a couple tips for how to recover from a drawdown, what I've learned from recovering from a drawdown. One of the main things that I had to overcome to get me to this point of trading consistently and being profitable consistently when I'm not working on developing a strategy. So I'm going to give a couple tips of how that I've, a couple of gems that I've gathered, as I went through my drawdowns and how to make it to that next level, right? So drawdowns, they're pretty much an inevitable part of this business. And I think it's, something that every trader experiences. And I think that the sooner you experience a drawdown, the better off you will be, right? Because there's a lot that can be learned from these drawdowns. There's a lot of gems that are, that come along with these drawdowns, and making it to the other side gives you a lot of tools and a lot of resources that you can use throughout your trading business or your trading career. So I think the sooner that you come into this drawdown as a trader, as just starting out, from the time that you just start out, then I think you'll be better off in the long run getting that, getting the first phase of that out of the way of your progress, right? And then it reveals a lot of things about you, right? You got to be open to see it, open to receive the message, right? As well as show you external things that you can use to, benefit your edge or benefit what you bring, or, boost what you bring to the market, right? So let me start this off by clearly defining what I'm talking about as drawdown, kind of painting a picture of, so that, you have a clear picture of what I mean when I say drawdown. So by drawdown, I'm not talking about just taking your normal losses, just taking a loss or just a few losses, right? Taking losses in this business is normal. That's not necessarily what I mean by drawdown. Now, if you look at it from a micro standpoint, like on the day, so if I started out and my first trade was a loser, on the day, that's technically drawdown. But I'm looking bigger picture here. I'm talking deeper than that. We're going deeper than that today. So the drawdown I'm referring to is when you've taken a series of losses, or some big losses, some significant losses, and I'm talking about, getting to a point where you've given back a significant portion of your recent gains. So like, for example, let's just say you want to look at this from a week's perspective. And in this example, let's say you were up $1,000 on the week. It's Tuesday. At the end of your trading day on Tuesday, you were up $1,000. And then throughout the rest of the week, let's just say it's Thursday at this point, or it's even Friday, and you experience a period of struggle where you've given it back maybe 80% or more of your gains. Usually drawdowns, the kind of drawdowns that I'm referring to, is you've given back all of your recent profits and you're kind of in the hole, from a bigger picture. So, usually a drawdown will be identified as by being in a negative within a given period of time. So let's say you're tracking your progress month to month, and if your overall P&L is red for that month, and it's going to take you several good trades to get back to, in the green. Also considering your normal losses that you would have, from your good trading. If you're red in the month and, you're at this point to where you've taken a series of significant losses to where it's going to take you several good trades or several, you doing the right thing to get back into the black, into the green, then that's the kind of drawdown that I'm referring to right here. All right, so I just wanted to make that clear so we all know exactly where I'm coming from. All right, so the first thing that I would want to address, or that goes along with recovering from a drawdown, is building the traits you need to recover from drawdown before you even experience a drawdown, right? So you want to know what good trading looks like before you find yourself in this situation. When you find yourself in a hole, taking a series of losses, the last thing you want to do is to start changing things up, right? You don't want to start making a lot of changes. You may start making changes thinking that the problem is the market or something outside of yourself, when you haven't proven to yourself that you have a system that works for you, or you haven't proven to yourself that you're capable of performing that system or working that system for the best results, the way that it's designed to work, right? So you need to know, it helps to know what good trading looks like by your definition, so that you have a solid base to fall back on, when you come into this period of drawdown, or this struggle period that led you to drawdown. So now that you got your base and you're at this moment of drawdown, you definitely want to pay attention to what motivates you, right? For example, are you motivated to swing for the fences if you see your P&L while you're actively trading? Does seeing your P&L while you're trading affect how you execute your trades, right? Or does knowing your overall position for the month affect your trading decisions? Right, this is something, again, I had to experience firsthand. The different things about trading that motivated me, whether that was, it could have been the P&L, it could have been music that I was listening to in the moment, it could have been the opinions and the projections of other traders if I was listening to them while I was trading. So you gotta have you want to be clear about what motivates you, whatever motivates you, so that you're aware of those things, and you can make whatever changes that you need to make in relation to your motivations when you find yourself in a period of drawdown. Right? So whatever you find that your motivations are, you want to build systems around that will help you stay on track with your strategy and your plan. So something else that has helped me to get to the other side of drawdown is keeping the big picture in mind, right? This ties into the motivation, right? It may not be, when you look at the bigger picture, it may not be as bad as, you felt like it was in the moment. So looking at the results from a wider perspective can show you how significant the drawdown really is. So you may feel like in the moment that the drawdown, you've lost $2,000 or $3,000. And in the moment that feels horrible, you feel like, oh man, I'm messing up. I lost a lot of money, and what am I doing, and all this stuff. And then you go back and you look at your performance over the year, and you see that that's only maybe 1% of your total gains. Now, still that can be significant if you continue to let the snowball build. But having that awareness can kind of get your mind back in the right place, to where you've kind of put your emotions in check, right? And you're not focused on how much money you lost. Now you can focus on your execution and getting through this period of drawdown and back into the upward trajectory of your trading business. So it's easy to fall into tunnel vision when you're watching all of your profits go back to the market. So looking at things, taking a step back and looking at the bigger picture can help you, not get caught into that tunnel vision for too long. So while you're doing this, while you're reviewing everything, you want to review what got you to this point and address any mistakes or, anything that you did that you weren't supposed to be doing outside of your strategy and outside of your plan. You want to do an honest and thorough assessment of how your performance contributed to the drawdown. Take a look at how you manage risk. Look at areas where your execution of your strategy may not have been what it should have been. This, in these times, it really helps to have your recordings of your trading sessions so that you can have those to refer to, right? Because during these times, it's easy to blame the market for being manipulated or too choppy or lacking sufficient opportunities for the little guy to take advantage of, right? The list goes on and on of all the reasons, but what does that have to do with what you did, what you brought to the market? Really be honest with yourself when you're going through this assessment, not in a way that you're beating yourself down, right? But in the way that where you're finding the little areas that you can do something about and improve as a trader. Now, if you're the type of person that just feels like you just have to beat yourself down to get the message, then go, vibrate in your frequency. Hold the frequency, do what you do, but try to get out of that as quickly as possible and keep it moving. Take a couple minutes to beat yourself up if you need to, and then get back on track as soon as possible, right? Because, as retail traders, we have very little, if any, control over the market or what the market does as a whole, right? So, but what we can control is how we show up to the market, which will allow the market to move in our favor. Now I'm just gonna let you marinate on that one. That may be another trader trigger for another day, but let me just keep it moving. Stay focused on this topic. So now that we've addressed your trading, your strategy, your performance, you looked at your bigger picture, all the trading stuff, right? You may also want to explore how other areas of your life have affected your trading that has brought you to this period of drawdown. This is one of the things that most people overlook from my perspective. Was something in your life affecting your focus while you were trading? Were you caught up in some public or personal event and carried that energy into your trading sessions? Or could you use more discipline and consistency in your personal life, right? So after you've assessed what got you here, if it's something like consistency, if that's the problem, I found that it helps to look at how I was being consistent outside of trading, right? Because you're the same person trading as you are when you're not trading. So if you're not being consistent in things outside of trading like you're supposed to be, then it's highly unlikely that you're going to be consistent when you're at your trade station. So the good news is that this is easy to fix. You don't need to be 100% consistent at everything that you do. You just need to find those simple things that you can practice your consistency and be consistent to, little simple things. Like, so let's say for instance, you're practicing, or you start practicing this by saying that you're going to do a quick 5-minute walk before you start trading, right? Or something as simple as you're going to do a quick little, at minimum 1-minute meditation before you place your first trade, right? So when you start staying consistent to these simple things, eventually that consistency is likely to bleed over into other areas of your life. other areas where it would have been harder for you to be consistent to it. So, if you're trying to, and this trading environment is so complex, if you're trying to initiate your consistency through the markets, it's going to be extremely challenging to start your practice of consistency there, because it's so complex. So that's why it's easier to I would recommend it's better to take the simpler route and let that consistency with those simple things bleed over into this complex, challenging environment of trading. Right? So, because you're going to need this consistency muscle to be strong, because it's required to recover from a drawdown. Consistency is so powerful that it can help you mitigate how often you experience a drawdown and the severity of that drawdown. Right? So I know personally most of the drawdowns I've experienced wouldn't have been as bad if I was more consistent and disciplined to my strategy before, with all of my trading leading up to this period of drawdown. Right? So along with consistency and discipline, you're going to need confidence. Confidence is a major key to trading successfully. So if you're not confident in your strategy, if you're not confident in your ability to execute your strategy, if you're not confident that the market can give you good opportunities, you could end up missing a lot of the opportunities that are going to pay for all the losses that are inevitable and are going to come at some point. Being confident and being consistent and being disciplined and sticking to your strategy and executing when you're supposed to execute, that's going to give you the capital, that's going to give you the cushion when you get into this phase of drawdown and when you start taking a series of losses, and when you just, for whatever reason, get outside of yourself and you take a bigger loss than what you're supposed to be. Right? This also goes into how well you understand your strategy, or how well, you understand your strategy. What makes your strategy work? Why does it work for you? Where and when does it work best? When does it not work, and how can you identify this as early as possible, either before you enter into the position or before before you take a big loss that really hurts your P&L? How well you can answer these questions will play a role in how confident you are, when you're executing your strategy. So if you can do these things as best as you can, I would aim for perfection, right? But if you can do it, if you can follow these steps, and you can trade successfully, or you can trade what you are defining as good trading, right? And you can do it as best as you possibly can, and you're still not able to recover from drawdown, then you can conclude that the strategy may not be good for you, or there's something missing, or something that you may need to add or take away that's actually affecting your trading, and that fed into this drawdown beyond just yourself as a trader. Right. So I bring this topic up because I heard, a lot of people discuss this topic on the surface, just giving some generic tips like, stick to your strategy or size down. So for me personally, sizing down is usually the worst thing that I can do, especially if I'm paying attention to my P&L or the progress of, my profits, for the week or for the month. But on the other hand, sizing down has been helpful in helping me build my confidence, right? So now, honestly, I'm at the point where, I'm actually no longer affected by these things anymore. I've removed much of the uncertainty that would trigger me into fearing the worst case scenario, that would have me being trigger shy, and that would, have me affected by, certain things like me not seeing my P&L come back too soon, or as soon as I wanted to, right? But I had to stumble into learning how to recover from a drawdown. because all the advice that I had access to up to that point before I actually figured it out, it didn't really align with my experience to help me get back into the green. So it wasn't that helpful for me. Like, I was able to find a couple of gems here and there, but overall I had to figure it out for myself, what the best approach for me to recover from these types of situations. So this is why I figured, like, this conversation, this topic needs a more in-depth discussion or way of looking at it, right? So the point is, this is a personal journey, right? You're going to need to assess your situation and apply the tips, whatever tips you come across, right? Whether it's my tips or someone else's tips, right? And apply the tips that fit your situation in a way that best fits your situation. So if any of the things that I've covered here has you feeling some type of way about other than confident that you can recover from a drawdown, I would encourage you to take some time and work on whatever you need to work on, whatever was triggered for you, without risking your own money, right? So I've done this several times, right? So you can do this in a sim environment, or you can use these funded accounts. So the main purpose behind me, using funded accounts, why I primarily use funded accounts, is I'm not as disciplined with sim trading, because of the emotional element that's not there as much, when there's no real money on the line. So, when I'm paper trading, I'm more likely to fall into that let me see mentality, and I start trying things out that's outside of my strategy or outside of my plan, things that I'm just seeing in a moment. I want to see how that works, but that's doing, that's not helpful for my consistency. It comes a point to where, I've seen an opportunity to do something different, but me exploring that actually, gave a negative, result to me being consistent, and me showing up and being consistent to my strategy, which overall hurt my ability to profit and to grow my accounts. Right. So that's why I use funded accounts, because it keeps me, it not 100%, but it does a pretty good job of keeping me focused and out of that let me see mentality, so I can work on the things that I need to work on that has led me to where I am today, right? So with a funded account, I have to actually pay real money. I got to risk something tangible instead of just time. Having that real money on the line, but not all of my trading capital has contributed to much of my growth. Or I don't have all my capital, my trading capital, locked up in it, in an account to where, or I'm not using my full trading capital, risking all of my trading capital to pay for the tuition of my growth. Because I've taken periods of time to just sim trade with the same intent that I have in these funded accounts, and the results are just not even close. I've developed so much more efficiently using these funded programs than in the sim, right? So, and also in my opinion, the tuition has been 100% worth it of paying for these funded accounts. And I haven't done a lot of resets, but every time a sale comes up, then I'll get another funded account if I need to, right? Or another evaluation if I need to. And then I'll keep doing the work and I keep growing. And it's got me to a point to where I said this on one of the last live streams, that I just have a big collection of tools in my tool bag that I have at my disposal, to where I've significantly improved my consistency. I've become more disciplined, and I have significantly improved my confidence, not only just in myself, but in the opportunities that the market presents. Right? But with all that being said, these are just I'm just sharing a few tips for what I've learned about recovering from a drawdown. Right? So I hope that was helpful to someone, and I appreciate everybody for coming through. Also, make sure, just quick plug, make sure you check out the Ultimate Trader's Guide for the most valuable income producing information on the internet. All the links that I mentioned are in the description. So with all that being said, I hope you have a good week, a good rest of your trading session today. And until next time, trade it easy. Appreciate your origin.